Welcome to another episode of The Brand Called You, a video and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from hundreds of successful individuals from around the world. Today, I'm very privileged to welcome an accomplished entrepreneur, historian, and a multifaceted individual from Pittsburgh, USA, Daniel Peris. Daniel, welcome to the show.
Ash, thank you so much for having me.
Thank you. Daniel is the Senior Vice President of Federated Hermes, managing an equity portfolio of 25 billion. He's trained as a historian on the Soviet Union, and he's an author of 3 books on investment, 1 book on Soviet history, working on a new book on investing in the aftermath of the last decade. So, Daniel, tell me, what would you say are 3 key milestones in your life?
You know, from a business perspective and from the career development, even personal development, the thing that I go back to over and over and over again was my choice and interest, natural interest in history.
Okay.
And that has informed my decisions ever since. And I had the opportunity, the great fortune to pursue an interest. It was Russian and Soviet history, which was very specific, very narrow.
Yeah.
But I took away from that a historical type of analysis and framework of analysis that I still apply in almost everything. My child rolls his eyes, my 16-year-old, because my answer to almost any question that he might ask is, I start with, well, as a historian, no. So that has been a really important force in my life, and I've been very fortunate. This may be the second or third elements of it that to get a good higher education and be able to pursue those historical interests, even in business.
Very interesting. And you know, when I was reading about you, I was so fascinated from an academic historian to financial research. What made you make this transition, and what were some of your challenges?
Well, it was kind of difficult to live through, I have to admit, but the main challenge was a business one, which is the market for Soviet studies, Russian studies, heading into the 90s. I entered graduate school and focused on the Soviet Union in the 1980s. There was plenty of demand, and there was supply, but there was plenty of demand. In the 1990s, demand for people with the skills that I had, in many ways in academic Soviet studies, plummeted. So supply and demand, they're just the academy was shifting towards China, towards India, towards the Middle East, and the Soviet Union as a threat, a Cold War threat, was receding. And so there just wasn't as much demand. And I could see that in doing almost a business analysis of my chosen career at the time, Russian studies, Soviet studies. And I said, well, there's not much future here. So I'm going to move in a different direction. It was relatively easy to make that conclusion. It was fairly difficult to go from a Russian studies person to a financial analyst. I did not open an Excel spreadsheet until I was 33 years old. And I was competing with 21-year-olds who were fluent Excel speakers. And I was struggling to do the most simple Excel tasks. So that was a challenge, I have to admit.
And did you have to retrain yourself quite significantly?
Yeah, I've been asked that question, why don't you just go to B school, to business school, and get an MBA? I didn't want to. I had already I had a PhD, I had postdocs, I had plenty of degrees, but I didn't want to go back and go back to school. I'd spent, shall I say, too much time in school, and I felt that wouldn't make a lot of sense. I did go through a credentialing program, the CFA program, at the time, but that was as far as I was prepared to do. It was much more of an act of will. I just simply said, okay, I'm going to learn this myself, do this. I do have certain skills, the writing and communication skills and analysis skills, and hopefully historical analysis. But I didn't have the stomach to go back to business school. I'm sorry to say.
I can imagine. So let's talk about your, first journey as an investor. We've just spoken a little bit about your historical journey, but when I was reading about you again, and I quote this, in a profession devoid of historical sensibility, knowing the past is a form on innovation and a distinct competitive advantage. Help me understand this phrase.
There are lots of examples of it. And I think it's almost singularly the thing that has helped me in my career in investing. I went from a career and a community and a mindset, which is all about understanding, in many ways, the present in terms of the past, to a community, finance and investing, which has no conception of the past,
Right.
no conception of change over time, no analytical framework to understand the past. It's a static environment. The University of Chicago offers certain analytical tools, which are all about right now.
Right.
And most of the people who go into the investment world aren't interested in how things got to where they are now. They're only interested in what they are now and what they're going to be 5 minutes from now. And once I'd settled into the investment career, I realized I am among a community of very intelligent, very capable, well-meaning people, mostly self-interested, grant you, but capable people, but they're absolutely unaware of where they came from, or business models that existed in the past, or paradigms of human behavior and business development and investing behavior that have existed in the past. And there are numerous examples.
I'm sure.
If you do look at, for instance, electronic vehicles, which are all the rage, and you would assume that the business challenge faced by investors in trying to understand these companies is brand new. It's not, it's not new at all.
Correct.
There have been not only electric vehicle moments in the past. The first generation of vehicles were electric, not internal combustion. But there have been similar examples of a technological development in which everyone piles on, and there are winners and losers, and good investment decisions and bad investment decisions, and you can learn from those examples in the past. I think it would help any investor trying to figure out the EV phenomenon right now should look at the EV phenomenon in the past, but other episodes in the past of technological breakthroughs and changes in human behavior associated with them.
Wow. And, one would have thought that when you do private equity investment or investment in the markets, there is a lot of data available about what is happening historically. If one country is arming up, or if one country's, got other serious political challenges. And I don't know if there are trends available to be able to link those trends to the financial markets.
Well, the long scope of history, companies that have the wind in their sails in terms of the economy. It's hard to ignore China and India, and they were not significant players in modern finance X number of decades ago, but now they absolutely are. Right. So that, again, having a historical sensibility of knowing, listen, the 20th century, and this is particularly relevant for investors based in the US, the 20th century was the US century.
Absolutely.
And it's too easy for American investors and analysts to assume that would continue indefinitely. Maybe it will, maybe it won't. But if you look back, you see how the 19th century was the British century, and the 18th century, to some extent, 17th century were France, and before that was Spain. Right. And is the China the driver of the agenda in the 21st century, and India? So the benefit that history provides is allowing you to escape your own framework and to see it from outside.
Amazing. Okay. And if I go as a follow-up question, how do you manage to leverage this historical perspective to manage equity assets? It
can be difficult in a practical sense. It's certainly the framework intellectually, but if you are looking at an investment of two similar companies, say two telecommunications companies, you really have to take, there are two dominant telecommunications companies in the United States. You have to take into account their current status, their plans, management, cash flows, et cetera. Looking back at what happened 100 years ago may not be directly relevant, but we have really implemented, in terms of the investment philosophy, in the case of the assets that we manage, it's dividend focused. And that is very, very historically oriented. You're looking at how businesses, public and private, every business, including the brand called you, and Ash's business is based upon cash flows, present cash flows and future cash flows, and expectations of future cash flows. And that's a very established over the last century form of analysis, but it's not very popular. It wasn't very popular during the internet bubble. It's not very popular now in the US with SPACs and with the electronic vehicle phenomenon. And so we are applying what we think is a historically almost universal for the last 5,000 years of civilization and business in every form of present value of cash flows, even though the math was only worked out about 100 years ago.
Absolutely.
To me, it is a historically based form of investing, and we're applying that to companies that are available in the stock market. That's dividends. It's dividend focused investing. There are times when that's out of favor, but there are times when it's in favor, and it's certainly very clear and crisp way of communicating to clients. Here's how we're investing. It's applied to modern companies, but the format of investing itself is very traditional, something your grandfather or grandmother or great grandparents or 5 generations before would recognize, not necessarily in terms of the stock market, but just in terms of businesses. What is land worth? It's worth the yield, the crops that you can get off of it. What is a business worth? The cash flows that you can receive from it, whether that's a business 100 years ago, business now, or a business 100 years from now.
You said it so well, and I go back to what my grandmother used to tell me, and I believe that's the same in China. Old conventional wisdom was invest in gold and land, because these two things will always serve you well.
The land part, I do not disagree at all. And the reason is because you can do a discounted cash flow analysis of the land, of the rents, of the crops. It's a business. Gold is different. It's a hedge because gold does not produce anything. Now, I know gold is particularly popular as an asset in India, above and beyond investment purposes. It's extremely popular. It's culturally rooted. So I can see that. I understand the allure of gold, but I do categorize it as a hedge against other currencies declining. It does have some industrial uses, and in India it is significant cultural significance. But for me, there's a difference. Land is productive. Businesses are productive. An investment in a company, a business is productive. Gold is a hedge against something going wrong, as opposed to things. So maybe you want to have both, but I think they really serve very different functions.
I agree with you. So you manage a portfolio of $25 billion. What is your investment philosophy, and which industry groups do you focus on?
So we have to go through the existing rules of the SEC and their distribution partners. There's just a financial community. So you have to state what you're doing in terms that everyone else will accept you. So I can talk about being a historian, and I can talk about dividend this, dividend that, and everything. But when we go to market, it's in categories that are approved legally by regulatory authorities and by distribution partners. So we talk about equity income. The equity income, it's basically dividend investing, and so that is the philosophy. And as you consider the U.S. market, it's a non-dividend market. So that's what makes us distinct. The yield of the U.S. stock market is about 1.5%, extremely low. The dividend payout ratio of the major companies in the U.S. market is only about 40%, 35-40%. That includes some, very large, important companies that don't pay dividends at all. So I'm not going to call it a boutique investment strategy because it's too historically rooted, too widespread, too well known to call it a boutique strategy. But in the United States, dividend investing, this manner of investing, has been out of favor for about 3 decades. If you look at the math of when it became hard to be a dividend investor in the U.S. stock market, it's about 3 decades ago. So we've been doing for 2 of those 3 decades what has been hard to do, and that has led to our business. It turns out there are plenty of investors, plenty of customers who do want to apply this, call it old-fashioned approach to new companies, but this to new and old companies, apply this approach and get a check, the dividends from their investments on a regular basis. And so that has been our niche for a while. Now, during that time, many other investors are just happy to chase internet stocks or electronic vehicle stocks, and they do very well from a straight capital appreciation perspective. There are no dividends involved. And that's fine. There's plenty of room in markets for disagreement, but we will continue to focus on equity income, focus on dividends for our clients.
Fascinating. So I'm going to ask you one more question on the equity part, and then move to your books.
Sure.
And this question is about the millennials and the Gen Zs.
Mm.
They are the people who have started to inherit the earth and are now gradually changing things around for all of us. My question to you is, in the world that you are in, which is investments, how are the millennials and the Gen Zs beginning to change your world?
Yeah, that's a great question. And I'm going to have to give a bad answer, which is
Okay.
I would like to say
Uh-huh.
that they're going to come around to my view of the world,
Okay.
but there's scant evidence of that.
Okay.
So I'm a baby boomer. I'm the last year of the US baby boom. I was born in 1964.
Hmm.
And I sort of identify with that group. And but it's very clear that in the definitions of business
Hmm.
and what they consider important for valuation and approaches to investing,
Hmm.
that they're quite different. The up and coming generation. I think that's one of the reasons why in the U.S. the dividend investing is somewhat of a minority, meaning not as common, not dominating
Hmm.
form of investment, because the younger generations are more comfortable holding stocks that don't pay dividends. They've just come of age with that. They're
Hmm.
more comfortable making big bets on something new.
Hmm.
Now, maybe as they'll age, they'll change.
Hmm.
But for now, I have to admit, as even though I'm making a play as a historian,
Hmm.
and this is where again my son's eyes rolls. Stop saying that.
Hmm.
As a historian, I believe they will come around to understanding that certain things are recurring and the businesses have to ultimately have cash flows in order to be
Hmm.
successful. For now, a good part of the U.S. stock market, supported by that generation of investors,
Right.
has a different view, and they are more intrigued by the technology. They're more intrigued by just the share price. They don't care about distributions. They're happy to just sell shares, capital
Hmm.
gain, and just sell the shares. There's nothing wrong with that. It's not illegal. It's
Yeah.
not immoral.
Yeah.
It's
Yeah.
not
No,
unethical.
absolutely.
It is a different approach.
Absolutely.
But at the end of the day, they are not as convinced about the need to have distributable cash flows, dividends from the equities, as perhaps prior generations. We'll see whether that lasts. But I'll admit that's been a challenge, frankly.
I agree. So Daniel, now let's move to your books. Um, you know, First tell me about, I was again reading about you. You have done a study on the Soviet Union, on the Soviet effort to promote atheism. Uh, Tell me about this, because, I was hearing some other authors' books, and they again seem to say that the Soviets actually promoted atheism like a religion.
Yes, that's it. You got it right. You just summarized my book. It took me 10 years to say what you just said in 2
Oh,
seconds.
wow. Okay.
So well done.
Mhm.
But I had to spend the 10 years to understand that 2-second summary.
Mhm.
So as I said, I was trained as the very, very late Cold War, the Reagan era Cold War. And my generation of students going through graduate school, we worked through the 20s and 30s. I was very fortunate to be from an historical perspective, to be in the former Soviet Union and in Russia in the early 1990s, when I had access to Communist Party archives and archives that were formally closed to Western researchers and historians. But there was chaos reigning, and the archives were basically open. So I was able to get in, do my work, finish my dissertation, publish it as a book. And it was about the Soviet effort to dramatically transform a society very quickly.
Wow.
And what they found was it's really hard to do that without reapplying the traditional forms of behavior that you're basically trying to replace. So in the very first years of the Soviet government, their goal naively was, we'll just get rid of religion and everyone will be content without it. And what they quickly found was that's not working.
Yeah.
And instead they create a structure of atheism that strikingly, but not very surprisingly, looks a lot like a religion. Now, it wasn't a very successful religion. It didn't last, but they had to replace rather than get rid of, because getting rid of, offering nothing in place of something just wasn't working. So you had, in the book is a description of Soviet atheism as a quasi bureaucratic form of religion.
Fantastic. So I'm going to now move to the last segment of our conversation, which are some questions for you personally. So Daniel, successful author, investment manager, historian, from where you stand today, as you look back and as you look ahead, What does success mean to Daniel?
Boy, that's an interesting question. It's difficult not to be kind of egotistical about something like that.
Hmm.
But I was raised in a context, my parents and friends where education mattered a lot,
Hmm.
and I am the fact that I'm able to sustain a writing career
Mm.
is really important to me, and it was important to my parents have both passed away, but it would have been very important to them to know that
Okay.
as well.
Mm.
And so that matters a lot to me. That I'm not really an academic, but I have an article coming out in a purely academic journal
Wow.
in a few months. I'm very,
Okay.
that took a lot of
Mm.
effort, I have to admit, at this
Sure.
stage in my life,
Mm.
in a Russian history journal. And so I'm very pleased with having done that and being able to write. It's not. I'm not writing a million seller books, and I'm not going to get the Nobel Prize in economics.
Mm.
But the ability to write, whether it's on Russia or to write about financial history or finance, to me has been, for me, an important measure of success, above and beyond just say the day job, as it were.
Fabulous. And a follow-up question to that is, who or what inspires you?
I'm still inspired by great writing and
Mm.
great communication, crisp communication. In the
Okay.
age of Twitter, you see this, or Facebook,
Mm.
a well-written post on my circle of friends on Facebook really, brings a smile to my face. Or Twitter's dangerous, but Twitter is, if you can do it and without being too snarky and sarcastic,
Mhm.
is a forum for crisp communication. You have to be crisp on the internet because there's just not a lot of space.
Right.
So that continues to be sort of an inspiration for me to work in that realm. And I have, a circle of friends who are very involved, and I try to be as involved as I can in my community. I'm at that
Mhm.
stage, sort of making the transition to giving back,
Mm.
and the people around me who are ahead of me in giving back are the ones I'm trying to emulate as much as possible. I'm very fortunate to be in that position.
Fascinating. So now time for two more questions.
Sure.
My next question is on failure. Now, this question is more relevant for people from my part of the world, which is in Asia, because I've often said that parents in India or China don't teach children it's okay to fail. And that manifests itself in behavior patterns. So you suddenly see Indians running, want to be first everywhere, etc., etc. Yet we fail all the time.
Mhm.
My question to you, Daniel, is what have been some of your learnings from some of your mistakes?
Yes, so I did that transition. My transition from academia to finance was difficult.
Okay.
It had setbacks, failures,
Mm.
and it was within academia and within my training and upbringing, which was not unlike what you just described, common in India or China, where I was expected to excel academically and then become a professor, which basically I was on the path to doing.
Mhm.
I decided to leave that, but I was not trained for or prepared
Mm.
for working in business. And it took a great deal. And it wasn't just about learning Excel. It was about ego and teamwork and
Correct.
working with others and picking your fights.
Mhm.
Academics pick everything as a fight, and everything
Yeah.
is a big fight. It's just not worth it.
Mm.
And in business, you have to be much more judicious. Learning that, it's part of like getting married as well. With spouses,
Right.
you have to learn to compromise and so forth. So that trend, and I got married right at the time that I was making the transition from
Wow.
egotistical academic to entry level business analyst.
Mm.
So that was a very, very humbling experience, and having to learn that you can be wrong, that you shouldn't, don't speak first. You don't know the answer to this question. Don't fake it, etc. It took a number of years and was, I think, we'll say it's a character building experience. But you're right; it's probably not a character building experience that I was used to in my upbringing, or that you're the people that you're referring to in certain cultures. And we have the same kind of culture of hyper excellence here in certain segments of the population as well in the U.S. And the best thing that can happen to those people is some failure. And I think it creates tools of understanding, self-understanding that are very, very useful later on. Plus just the practical tools of having to cooperate on teams and work on teams, which is standard in business practices now. And that's not how individual academic stars are trained, and that's a shame. They should be much more oriented toward teamwork.
Fabulous. I want to thank you. I mean, this has been such an incredible learning experience for me. I haven't come across anybody so far who is a historian, that for Russia, and now runs a $25 billion portfolio and is writing another paper in an academic journal. So more power to you. Thank you again. And I look forward to staying in touch.
Ash, thank you so much for having me on your show.
Thank you. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.